In today's video, we're going to talk a little bit more about exits and trailing stops rather than a setup here, because actually in the market in the last couple of days, all we have are trades that we need to manage rather than new setups, because we're just not getting the pullbacks, at least not on the ones that I've been following. So if you remember, we had a zigzag or two-step pattern setup, and I did repost that video on Twitter already, and now I'm going to go over what we're seeing on the flip side. So typically the target for the two-step, or at least target number one, is the 1272 extension of the full zigzag pattern. That has been met, so target one has been met. Target two is going to be this 137.02 area. Now another target from this old swing comes in just above that, and that is the 1272 of the larger swing, which also just happens to overlap some projections of a prior rally swing. And then note that these swings are also similar, so I've run the projections of those from this recent low. So we know that we're in a place where the market could pull back, but that doesn't mean it will. So what's the best way to manage this trade if you're still in it? Well, some of you might take partial profits on some and then try and keep a runner for the rest, but there's another way to do it. You can look at a lower time frame chart, and you can use either symmetry to trail a stop, or you can just have the stop underneath the prior swing lows. So for example, as it's stair-stepping up, have the stop underneath the prior swing low, prior swing low, prior swing low, prior swing low, but just continue to move it up as you make new highs. So that's one option. So for example, you could have a stop underneath 133.98, unless you want to play it even tighter. You can use an even lower time frame chart than this 30-minute chart, but that would be one place where you could put your stop at this point. Or the other option, which is going to be similar in this case, is to use the symmetry. Take the prior declines within the uptrend, and if we start declining for more than the prior largest declines, then this move is probably at least temporarily over, and in that case you can see a deeper downside correction that you're probably not going to want to sit through. So those are my suggestions as far as trailing stops for an exit, because again, we did make at least the minimum target off of this two-step pattern when we hit the 1272 extension, and then we have another target again above at the 137.02. So I would say you can either have the stop underneath this 134.12 area, or just below this prior swing low at 133.98, and yeah, that's about it.